Okay, I have to be honest with you. I've spent the last hour just staring at two different screens, and I feel like I'm taking crazy pills.
That is usually a sign that earnings season has officially started. What are you looking at?
I'm looking at Estee Lauder. Today's February 5th, 2026. Their earnings report just dropped. And on my left screen, everything looks fantastic.
Mm-hmm.
They beat earnings expectations. They beat revenue expectations. They even raised their outlook for the rest of the year. I mean, it's like getting straight A's on your report card.
Very solid quarter, at least on paper.
Exactly. But then I look at my right screen at the stock ticker, and it's a total bloodbath. The stock is down nearly 20% in extended trading. It's just crashing. How does a company say, we're doing better than anyone expected, and the market responds by, I don't know, setting their stock price on fire?
It is the ultimate paradox, isn't it? But you've just stumbled onto one of the most interesting dynamics in the market. You're seeing the difference between, let's call it operational success, what happened inside the company, and market sentiment.
Market sentiment being how investors feel about the future.
Exactly. And specifically, how they feel about the future cost of that success.
So that is our mission on this deep dive. We need to solve this mystery. We are talking about a legacy beauty giant. I mean, these are the people behind MAK, Clinique, La Mer.
Huge brands.
And they're finally growing again after a really, really rough couple of years. And yet today is shaping up to be maybe their worst trading day ever. Why?
To understand that, we have to look past those headline numbers. We're standing at the one-year anniversary of their massive turnaround plan, something they call Beauty Reimagined.
Right.
And what you're seeing today is the market looking at the bill for that whole renovation and asking, is it really worth it?
Okay, let's peel this onion then. Start with the good stuff. Why did I think this was such a good report in the first place?
Because strictly by the numbers, it was a beat. Let's just look at earnings per share, or EPS. The guys on Wall Street, the analysts, they were expecting Estée Lauder to bring in about 84 cents per share.
Okay.
They actually came in at 89 cents.
So a beat.
A solid beat. And if you compare that to last year when they were at 62 cents,
Yeah.
that is massive growth. We're talking about a 43% jump in earnings year over year.
Wow.
For a company of this size, growing your bottom line by over 40% is usually cause for a champagne toast.
Right. And I saw the revenue number too, $4.23 billion. I'm assuming that was also better than people thought.
Slightly better, yes.
Yeah.
But here's the number that actually matters more to people who follow the company closely. Organic sales were up 4%.
Okay, hang on. Organic sales. That's just, sales, right? Why do we have to call them organic? It's not like organic vegetables.
Not quite. Think of organic growth as your actual salary going up because you got a raise versus your bank account going up because you found 20 bucks on the street.
Got it.
Organic sales strips out all the noise things like currency swings, buying other companies, selling off brands. It tells you, is the core business of just selling lipstick and lotion actually healthy?
Okay, so the core engine is running 4% faster.
Exactly. And if you take out the chaos of the travel industry, which we'll definitely get to, the underlying business is actually looking pretty robust. Plus, they did something companies don't usually do when they're in trouble.
What's that?
They raised their guidance.
Meaning they told everyone they're going to make more money for the rest of the year than they previously thought.
That's it. They're now targeting an EPS of $2.05 to $2.25 for the full fiscal year.
Okay, see, this is where you lose me again. They beat earnings, they're growing organically, they told everyone, we're going to make more money, and the stock plummets 20%. Make it make sense.
It's the price tag. It's the cost of the medicine. To get those results, Estée Lauder is going through a massive and frankly brutal restructuring. They have this acronym for it, the PRGP.
Sounds like some kind of government program. What's it stand for?
The Profit Recovery and Growth Plan. And in this report, we found out exactly how much this plan is costing them. So far, they've recorded $904 million in cumulative restructuring charges.
Whoa, wait, did you say $904 million?
Nearly $1 billion.
That is a lot of money. What are they spending $1 billion on? Gold-plated desks.
I wish it were that exciting. No, just think of it as fixing the plumbing of a massive old house. That money is going towards severance for layoffs, breaking leases on expensive real estate they don't need, and hiring expensive consultants to completely rewire how the company operates. It's messy, it's expensive, and it eats into your cash flow.
So investors see that bill and they just freak out?
They see the bill, but they also see the little warning labels attached to it. The company explicitly warned about near-term cost pressures. They're moving to a new operating model. They're dealing with new tariffs. And even though they raised the earnings outlook, they did something else that kind of spooked people. They narrowed their sales growth range.
Narrowed it.
They basically said, we might make more profit, but our total sales are only going to grow between 1% to 3%. They put a cap on the upside.
So it's a show me, don't just tell me situation. The market sees $1 billion in costs and a ceiling on growth, and they just run for the exits.
Precisely. It's the friction of the turnaround. They are tearing down the kitchen to build a better one, but right now there's just dust everywhere and you can't cook dinner.
So let's talk about this kitchen renovation. You mentioned Beauty Reimagined. That's the big strategy. It's been a year. What does that actually look like inside the company? Because I'm guessing it's more than just a new slogan.
Oh, it is a fundamental shift in identity. For decades, Estée Lauder Companies was basically a collection of fiefdoms. You had MC, you had Clinique, you had La Mer. And they all operated like their own little islands.
With their own marketing, their own supply chains, everything.
Everything. Which sounds great for creativity, I guess, but it's terrible for efficiency. If MC learns something about a customer in Shanghai, Clinique has no idea.
Right.
So the new strategy is called One ELC, One Estée Lauder Companies. They are centralizing everything. They signed a huge deal with Accenture to handle enterprise services. They're partnering with Google, with Microsoft.
So they're trying to turn a collection of, I don't know, artists into a tech company.
Or at least a much more efficient machine. And the main metric they seem to be obsessed with right now is speed.
I did see a stat in the notes about innovation speed. They want 25% of their sales to come from innovation. That feels like such a buzzword. What even counts as innovation?
New stuff, new products, new formulas. But the key isn't just that it's new, it's that it's fast. In the old days, and by old days I mean like 3 years ago, it could take Estée Lauder 3 years to get a product from a whiteboard idea to a shelf in a store.
3 years in the beauty world, that's an eternity. By the time you launch, the trend is completely dead.
Exactly. TikTok trends last for about 3 weeks. So they set this goal to triple their speed. They want to get products out in under a year. And in this report, they claim they're actually ahead of schedule. They said 19% of their launches are now hitting that fast target.
They gave an example, didn't they? Something about a Renutriv oil.
Yes. This is their poster child for the new way of working. It was developed in their innovation lab in China.
Okay, and how fast did they do it?
From concept to bottle in 15 months.
Okay, let me play devil's advocate here. 15 months. If I'm some sleek indie brand, a celebrity makeup line, 15 months still sounds like a glacier moving.
It is slow compared to a startup, absolutely. But you have to remember, this is a cruise ship trying to make a U-turn. Going from 3 years down to 15 months is a massive cultural shift. It means the lawyers aren't fighting with the marketers and supply chain isn't fighting with R&D. It shows the plumbing fix is actually starting to work.
Right, so they're making things faster. But we have to talk about where they are selling these things, because this is the part that honestly shocked me.
The channel shift.
Yeah. I always think of Estée Lauder as the brand at the department store. You walk into Macy's or Nordstrom, and there's the glass counter, the lady in the white lab coat. It feels prestigious. But in this report, they're talking about Amazon.
The brave new world.
Is it, though? Or is it desperation? I mean, come on. We're talking about La Mer. A jar of cream that costs $300, and they're putting it on Amazon next to, bulk toilet paper and AA batteries. Doesn't that just kill the magic?
That is the big debate in the luxury world. But you have to look at the reality. Department stores, that whole glass counter experience, they're dying. The foot traffic just isn't there anymore. You can have the most prestigious counter in the world, but if nobody walks past it, you go out of business.
So they have to go where the eyeballs are.
Exactly. And to be fair, they aren't just throwing the product into the general Amazon bin. They've launched 12 brands on what they call Amazon Premium Beauty Stores. It's a sort of gated environment, better design, a bit more control.
And does it work?
Well, the numbers say it's helping them stabilize. And it's not just Amazon. They're finally embracing social commerce. They launched TikTok Shop in the U.S. for Clinique and MA.
Which is just wild to think about, buying a Clinique moisturizer directly from a 15-second video.
It's how the next generation shops. In Southeast Asia, this is already completely normal. They just launched a brand on TikTok Shop in Germany, too.
But here's the thing that confused me about the North America numbers. They're doing Amazon, they're doing TikTok, and yet they said sales in North America were flat. All that effort just to stay in the same place.
Flat is the new up, my friend, at least for them. But you have to look deeper at the volume share.
Okay, unpack that for me.
So the total sales value is flat, but they're selling more units.
Mhm.
They are physically shipping more actual bottles and tubes than they were before
So why isn't money going up?
because the mix is changing.
Yeah.
When you sell on Amazon or TikTok, maybe you're selling smaller sizes or just different products than you would at a high-end department store. But the fact that they're gaining volume share, meaning they're taking shelf space back from competitors, that's a huge win. They haven't done that in North America for a long, long time.
And there was one other piece of news in North America that feels like a surrender, but maybe it's a smart one. MA is going into Sephora. I mean, for years, MSC was the destination. You went to the MSC at the mall. It was cool. It was dark. The music was loud. Now they're just another brand on the shelf at Sephora.
It's a defensive move, but a necessary one. Sephora is the new department store. If you aren't there, you basically don't exist for a huge chunk of shoppers. It's weeks away from happening, and honestly, it's probably 5 years too late, but better late than never.
Okay, so North America is stabilizing by embracing the enemy, Amazon, and Sephora. But we need to pivot to the other side of the world, because usually when we talk about big companies lately, the story is just China is struggling.
Right. The Chinese consumer is gone, the economy is slowing down. We hear it on every single earnings call.
But Estee Lauder, they seem to be living in an alternate reality. They said they had double-digit growth in mainland China.
It is the dragon in the room, and it is fascinating. While everyone else is crying about the Chinese economy, Estee Lauder gained market share in all 4 of their categories there: skincare, makeup, fragrance, and hair care.
How is that even possible if the economy is bad?
Well, it's the lipstick effect, perhaps. Even when things are tough, people still want small luxuries. And during the 11.11 Global Shopping Festival, which is like their Black Friday on steroids, Estee Lauder was the #1 prestige beauty brand on Tmall and Douyin.
#1. That is seriously impressive.
It just proves the brand equity is still massive there. The Chinese consumer still wants the real deal, the authentic product.
Okay, but if China is booming for them, why did they have to lower their guidance? Why is the stock down? I thought China was the engine that was supposed to save everyone.
Because of the difference between China and travel retail.
Oh boy. Travel retail. This term comes up every quarter and it always confuses me. We're talking about duty-free shops and airports, right?
Mostly, yes. Specifically, something they call Travel Retail East.
Hmm.
So think of all the Asian tourists traveling around the region. Historically, this has just been a gold mine for Estee Lauder. People buy huge amounts of product at airports.
Because what's the problem? People are traveling again?
The problem is the storefronts themselves. Imagine you are in the busiest airport in Beijing. You want to buy some La Mer. But when you get to the duty-free section, the lights are off. The shelves are empty because the landlord is changing. They're in the middle of switching from a retailer called Sunrise to new players like China, Duty Free, and a Volta.
So it's a logistics nightmare.
It's a total vacuum. Inventory isn't moving because the old tenant is moving out and the new one hasn't fully set up shop yet. Sunrise even shut down a universal app that let people buy duty free online. That entire sales channel just vanished basically overnight.
So you have all this demand in mainland China, but the travel network, which is usually where the huge profit margins are, is completely clogged up.
Exactly. And to make it worse, Japanese tourism is down because of some geopolitical tensions. So the whole flow of shoppers is disrupted. Investors hate uncertainty in travel retail because it's such a high-margin business. When that spigot turns off, profits take a big hit.
It really is a tale of two Asias. The locals are buying like crazy, but the travelers can't even find the store.
That is a perfect way to put it.
So let's open the bottle for a second. We talked about where they sell, but what are they actually selling? Because I feel like I see skincare everywhere, but does anyone even talk about Estee Lauder makeup anymore?
The data absolutely backs up your feeling. The winners in this report were crystal clear. Skincare and fragrance, both were up 6%.
Let me guess. La Mer again.
La Mer is the star. It's their best performing brand. It's practically printing money for them. And The Ordinary, the more affordable brand, is seeing strong double-digit growth. Le Labo, their fragrance brand, is also doing fantastic.
So luxury skin and luxury scent, that's where the money is.
That is where the margin is. But makeup is the problem child.
Why is it struggling so much?
Profitability. They pretty much admitted on the call that in some areas of makeup, they're barely breaking even. Think about it. Makeup is so trend-driven. You need a million different shades of foundation. The inventory costs are huge. The marketing costs are huge. And the competition is just fierce. Every influencer has a makeup line now.
So how do they fix it? Just stop selling makeup.
No, they have to innovate. They're banking on the Double Wear franchise. That's their famous foundation.
Yeah.
They have a new concealer that's doing really well. But they are also playing a card that I think you will appreciate.
Oh.
The nostalgia card.
Where they could bring back...
The Clinique Chubby Stick.
No way! The chubby stick. I remember that. In like 2012, if you didn't have a chubby stick in your purse, you weren't a real person.
They're relaunching it.
That is actually smart. It hits the millennials with nostalgia, and the Gen Z kids probably think it's vintage and cool.
Exactly. They're tapping into that early 2010s aesthetic that is all over TikTok right now. It's a very low-cost way to generate buzz without having to invent a new molecule in a lab.
Okay, so let's try to pull this whole messy picture together. We have a company that is beating earnings expectations. They're growing in China despite a terrible economy. They're finally moving faster with innovation. But the stock is down 20% because the renovation costs $1 billion, the airports are a mess, and they put a cap on how fast they think they can grow in the next 6 months.
That is the synthesis. They are fixing the plumbing, the supply chain, the data, the whole structure.
Yeah.
And at the same time, they're chasing cool TikTok, Amazon, bringing back chubby sticks. The problem is, renovations are messy and expensive. And investors looked at that $900 million bill and the flat sales in the U.S. and said, you know what, call me when you're finished.
It goes right back to that cruise ship analogy. You can spin the captain's wheel as hard as you want, but it takes miles and miles of ocean for the ship to actually change direction.
And while you are turning, you are burning a ton of fuel. That is the restructuring cost we're seeing right now.
So for the listener who's maybe just curious about business or maybe an investor watching this crash in horror, what's the big takeaway? Why does this all matter?
It matters because it shows the crucial difference between a business and a stock. The business fundamentals, the sales, the EPS, the organic growth, they're actually improving. The patient is getting healthier. But the stock market is reacting to the cost and the pain of the medicine.
And the uncertainty of it all. Markets hate uncertainty.
Absolutely. And don't forget the tariffs. They mentioned tariffs in Latin America are hurting them. It's a little reminder that these global giants are exposed to global politics. A tariff in Brazil or a landlord change in Beijing can absolutely tank a stock in New York.
So here's the final thought I want to leave everyone with. It's a bit of a provocation to chew on.
Let's hear it.
Estée Lauder is gaining market share in China, a market that everyone says is basically dead or dying. Meanwhile, they are flat in the U.S., a market that is supposedly booming.
That is a fascinating disconnect when you put it that way.
So, if the Chinese economy actually does recover, and if they finally fix their U.S. distribution with Amazon and Sephora, is this company a coiled spring? Is it just ready to explode upwards once all this dust settles? Or is this 20% drop a warning sign? A sign that the very definition of prestige beauty has changed forever, and the old guard just can't keep up with the costs and the margins of this new world?
That is the multi-billion-dollar question, isn't it? Can a giant learn to dance like a startup without tripping over its own feet?
We will be watching to see if they stick the landing. Thanks for listening to this deep dive into Estée Lauder's reality check.
Until next time.